Hey, and welcome back to Ferocious Education. This is Ed. Today I'm going to be talking a little bit about how do you usually go around into maneuvering red days or a stock that has really bled your portfolio or hit with a negative. So one of the examples that I want to use today here is one of my longer positions that I've been holding for a little bit or a while now. And it's YVR. It's Liquid Media Group Limited, and I bought it a little bit the around 4th of June. So that has been almost a week and a bit for me on a hold. So it cost me a little bit, and I'll show you how I've maneuvered out of it. So there's multiple things you can do in order to cut your losses, whether something like a trailing stop limit or stop order. But there's a bit of dangers to it when you're playing with a stock with high volatility. So what am I talking about here is, let's say for instance, a stock that is known to go up and down quite a bit. So when you look at it from a day view, you can see a little bit of what the action is, right? But let's say for instance that on let's say 26th of March, for instance, you had your stop limit at, let's say, 183. As you can see, it dipped around there and then went back on. So if you sold that day, you've lost quite a bit, while you could have held for the next day where it turned out green. So what I'm trying to show you here, I'll put 1 month, 30 minutes. You can see the insane amount of volatility that is caused for this stock. Now I'm just gonna remove these two just to show you here quite a bit. There we go. Better to show you graphs. Right, so you can see that there's a lot that is happening, especially onto the 1 month, 1 hour period. You can see that the stock has maneuvered up quite a bit. So for instance, if you have your stop order just, let's say, around here, right? The stock never really changed to 164, or let's say even 158. It never really hit it until the next day. So that's some of the dangerous things. That's why I don't prefer to go for stop orders. But again, sometimes that can really hurt me quite a bit, and I only do it for stocks that I'm not chasing, in a sense that I know it's a good longer term. So one of the stocks that I've bought here is YVR. So I'm gonna go around 1 month, 1 day, just to change a little bit of everything here. So I bought it around this period here on the 4th of June. What happened is that the stock has ran from the 2nd of June from around 167, and then it ran on the 3rd of June, and it went all the way to 220. Sorry, around 263 in the pre-market. So here, let me show you what I'm talking about. All the way here, 266 in the pre-market. And so my initial feeling was, that time the entertainment sector was very hot. GNUS was skyrocketing. DLPN was skyrocketing, so I wanted to get on one of them, and this was more of a Canadian company based in Vancouver. The COVID numbers are low, so I had a bit more confidence, especially a veteran company like theirs. So I put a buy limit pre-market at around 220, just in case I get a momentarily dip. And what happened, and I can show you here into the 1 month, 1 hour, is that massive dip that got caught in. And what happened here was an offering play at 188. And so it dropped significantly, and as soon as that dropped, right away, my order filled in at around 2.22, right around here. And so one of the biggest issues that happened is the stock price was now 150, and I'm stocked with 220. So I had to act quick because I didn't want it to bleed into my portfolio. Going from 220 to 150, and I had what looks like to be around 1,500 shares. That is quite a bit, almost $2,000 gone. So what I did was what I call average down, and that's a good strategy that I really prefer. So I bought around 150. That got me my average to be around 179. So if it reaches 188, which is the offering price, amazing. I'm out. I have a little bit of a gain. I can sell maybe perhaps even a 179, and I'm all golden. But what happened is that it did run until 173. I could not afford to sell at a 173 as that's a loss. And that's something with me where I really hate to sell at a loss, and I would rather play the stock around just to show a perfect portfolio. So what was my strategy? And I'll share it here with you. So I bought first time a 150 and 2.2. And then in the last few days, I ended up getting a little bit caught up. That was actually yesterday in the big dip. The stock price went from the last thing around 161. It dipped to 150. And as soon as it dipped to 150, I thought to myself, amazing, I'll buy a bit more. I averaged down. So I averaged down to around 162. Little do I know, the stock then dropped right after to 136. So if I literally waited, let's say something around 20 minutes, I would have bought the price at 14 cents cheaper. And that's why you leave a bit more cash to continue averaging down. So that was a bit of a mistake for me. Just because I relied a little bit on the moving average. And as you can see here, the moving average was the price that I bought it at was at the lowest of the moving average. So in technicality, it was not supposed to cross it. And what it did was it fixed itself on the next day, which was today. So this was one of the plays that I was down this yesterday in the evening. I was down $2,500 on this one stock. Today I sold. I saw the market run. I didn't get greedy. I didn't want to mix profit. I just sold at a resistance, and I sold at 164. The resistance is 165, but I chose to sell at 164. I actually ended up getting profit on this stock. So my net, I went from negative 2,500 on the day before, even though I averaged down. So that negative 2,500 ended up going to negative 2,000. I was going to hold this stock for at least a week or so, just because I really believe in the company. It's very important to know what you're buying. If you're doing this with something like GNUS or IZEA, which just recently dropped, you're going to be ending with a massive loss. So that stocks like that where you're chasing a trailing stop limit, which I can make another video on it. Just mention in the comment below if you don't know it, and I'll be glad to help you. Or a stop order would be very beneficial. But the scariest thing with a stop order, if the stock dips for a couple of seconds, then I lose everything. So I'm basically taking a risk because I know what I'm buying. That's one of the most important things. You gotta know what you're buying, especially if you're not scalping. So scalping is a different story. You can ride on the hype and get out, but this is one of the most important things that I really like to capture. So all in all, my strategy is to average down as much as I can, but you got to keep cash aside. So what I like to do is I like to have at any given point minimum of 50% of my portfolio sitting at cash, unless I see a really good opportunity. At some points, not gonna lie, I went 100% into the market, and at some little points I got lucky, and at others I got hurt. So sometimes, for instance, I'll be just a little bit up on one stock. I need to free some other cash to help my portfolio, or one of my stocks pops and I can get that cash out and put it into something else, and that would be nice. So there's a little bit of technical analysis put into it. So this one broke my technical analysis. This is a perfect play where technical analysis, you can see here that it actually broke the trend. And even if you put around the 1 month, 1 day, well, 1 hour looks ugly for this one. 1 month, 1 day, you can see that the stock was going a little bit, doesn't have much of a trend. It broke multiple times the moving average if you look into the 1 day, but if you go into a little bit around 1 month, 1 hour, it usually trends to be inside it. So that's what I was counting for, and that hurt me quite a bit. But all in all, a good strategy is to average down, limit your losses, stop order. If you know what you're buying, average down. So I hope this helped a little. Something that I would look at here, for instance, on IZEA, this one had bled insanely down to, I think, 153 and then jumped a little bit back. You can see that the stock has had a sharp, massive decline that happened almost momentarily. So what I would do for the stock is look to what the next action is. If the stock starts jumping up in price, then you'd like to do a bit more your technical analysis and try to figure out what's going on. Now, a lot of the action happened here is between 1 o'clock and around 3, around this period here, where you can see that there's almost 40 million shares dumped. And that's a massive amount that drives the number down. Now you got to think about what will the bag holders do on Monday? Are they gonna think about it on the weekend and think, hey, I'm just gonna cash out and whatever it is, I'm gonna go chase the next big thing? That could be one of the things that people are looking for, right? Because as you can see here, the volume still got almost, how much is that? You still got a massive amount of stakeholders. Now, I did trade the stock, by the way, back in 19th of May, so that was literally a little bit shorter than a month ago, and I sold it at about 0.60, and I sold it a little bit around 61, so almost for break even. If I held it, I would have been lucky, but that's one of the luck stocks. And I'm not gonna go through what happened with that company, but I really hope that the stock just jumps a little bit up for all the bag holders that are watching today. But it's a tough situation to know what you're buying. Stock like this, I usually don't share, where it went from 0.4 something to 3.3. But anyway, thank you very much for watching. Let me know in the comments below what stocks you want me to DD over the weekend. I'm going to be very active on this weekend DDing multiple stocks. I'm going to have at least 4 videos coming up. And once again, if you need any help with your portfolio or any questions, send them down, comment below. I usually try to comment as much as I can or reach through personal. Have a wonderful day, and again, subscribe and like and share the video if you like it.